In this video, I'm going to walk you through how to use the free Gamma Exposure tool inside the options trading toolbox. So again, you click on Gamma Exposure right here to the side. It'll populate the Gamma Exposure data for this symbol. By default, it shows SPY, but you can type in whatever symbol you'd like. It shows you the total gamma, max pain, put wall, call wall, gamma data, and then the gamma data on a actual stock chart. But if you're new to this, let me walk you through what each one of these totals mean. Gamma is used to help people know what they should be doing in the market, particularly institutions. It tells them if they should be hedging. Gamma shows basically the change in delta and how that's going to impact as the stock moves, how that impacts delta, how that needs to impact hedging, all that stuff. So if I'm going to simplify it super simple, what does this mean? When we look at total gamma, which calculates the gamma at each different strike price for both the put and call sides, it totals them together. If the total gamma is positive, that means that the institutions, the dealers, are going to be buying dips and selling rips. So they're going to be buying low and selling high. That's the idea. It means that volatility is suppressed and we're in more of a bullish market. That's what it means if it's positive. But right here, we have a negative gamma. Total gamma is negative. What does that mean? It means that dealers must chase the price. They're not buying low and selling high. They're chasing price where it is. This causes buying to push the price higher, and it makes it accelerate and can also lead to increased volatility. Now, you can do a lot more research on this. I will have a whole series dedicated to it on this YouTube channel later. But for the purposes of this video, to keep it short and sweet, negative gamma means that volatility could be higher, that people are chasing trades, things like that. And positive gamma means that volatility is more suppressed, it's more consistent, they're buying low and selling high and doing a more typical approach. Max pain is a calculation that comes from gamma that has a very good idea based on gamma data, volume, and open interest, where the stock is most likely to end or close at the end of a certain expiration cycle. If we look at this gamma exposure chart, it shows us the gamma that we're looking at for every single strike price. So if I hover over here, it shows me the $645 strike. It shows me what the net gamma is, the call gamma is, the put gamma is, the absolute gamma, and the call and put open interest. When I calculate these all together and do some math, it gives me a max pain right here of 683. That means that, as I'm looking at the 30 DTE gamma exposure chart right here for just the 30 DTE expiration, that means that in the end of 1 month, it's likely that the stock finishes around the $683 price point. Now, I can also do the 0 DTE for today. Where's the market likely to end today? 682. Where's the market likely to end in a week? 675. Where's the market likely to end in 2 months? 675 as well. And in 90 days, 655. So if we look at it compared to the market, it's giving us a bearish connotation, right? Let's go back to 30-day. We can see here 683 as a max pain. You can see that kind of puts it right here. So in about a month, it expects the market to stay flat. That's what the options market as a whole is thinking. Now, again, you can go way more deep on gamma, but from a high-level overview, that's what we're doing. We're using max pain to assess where do we think the market's going to be. We can use max pain to then construct options trades. So we think max pain will stay around here. We can construct an iron condor that trades around this range, where this max pain is the middle of the iron condor, and we have wider legs here, and that's our option strategy for the next 30 days out. We can do something as simple as that. We can also trade directionally because we're above it. We could put on maybe some call credit spreads, something like that to get the direction in our favor and play it that way. Gamma and volume also show us what are called walls, where we're going to hit certain levels. Now, what does that mean? If we're looking at gamma, there's a lot of put side activity right here, over 10,000 gamma data points right here at this zone. What does this tell us? This means that there's some institutions, some combination of traders that have a lot of contracts open right here. I'm going to assume that if it's a put all the way down here, they're put selling these contracts. They're selling puts on these. There's no reason to buy these puts. So that tells me there's a lot of exposure at this range, which means that there's going to be a very strong incentive for whoever has this amount of contracts or these amount of open positions here to keep the stock away from this level, right? If the puts are somewhere in this zone and you're buying, that's a hedge. But if you're down here and selling puts, if the stock gets down here and it gets below it, that's when you're going to be at risk. So there's a chance people are going to want to keep it above it, which then makes that become our put wall. So you can see here, that becomes the put wall, which is AKA known as a support level in the market. 600 will act as a very strong support level. Then again, we have 700 here. Where's 700 coming to play? About right here, 700. This is a very strong call wall, which becomes our resistance level. So that helps us just understand without having to guess and draw weird lines on charts. Just know based on options data where the support is, where the resistance is, where we have a likelihood of finishing in that expiration period, and what kind of activity we're going to be seeing in the market based on the gamma for that expiration date. I'll be going into more data on this here soon in a series, but for now, go to optionstradingtoolbox.com and check out this free gamma exposure tool. It's the only free gamma exposure software that I know of on the market right now, so go give it a try. All right, guys, thank you so much. I look forward to hearing your feedback.